Hi, and welcome to this demonstration of my brand new software called the Tax Tool. It is a piece of software that will really help you to enable business growth and make the most of all of the opportunities that are hidden within your practice. And it's really my privilege. My name is Francois du Toit. I designed and built this tool, and I want to take you through my journey, how this tool came to be, and then also just quickly show you what the tool can do for you and a few other things that I would like to share with you. So when we look at some of the problems and challenges that we face in a financial planning industry and financial services maybe in general, but when we look at that from a client point of view, doesn't matter what plan the client puts in place or what plan they want to put in place, it all starts with the cash flow and the disposable income of the client. In other words, how much money the client has got left after paying all of his expenses and taxes in order to really invest and attain assets, etc., that can be used to grow wealth. So the biggest thing that has an impact, or the thing that has the most dramatic and significant impact on a person's disposable income, is in fact the income tax that they have to pay. Doesn't matter where in the world you are, doesn't matter where in the world you live, you will have to pay tax. Well, at least the far majority of countries. What really baffles my brain is the fact that advisors and most other people, they actually ignore tax when it comes to doing planning or giving advice or whatever. And I think the reasons for this, if I can just sort of think of a few, is that you find that tax is a cumbersome thing to deal with. It is, it's a time issue, so it takes a lot of time and energy to actually do a tax calculation and look at everything and make sure you've got everything right. So it takes a lot of time to do that over and above all the other things that you need to do for the client. Tax can be complex, but it can also be simple. But I think the perception is that tax is a very complex area. Hence, we've got people specializing only in tax. And I mean, we're just talking about personal income tax in this, in terms of this tool. But if you start looking at company tax and trusts, etc., it can become a minefield of its own. And then I think this is the biggest one, is the fact that people think, or they have this perception that, even if I do the client's tax for him in terms of calculate his tax and look at his tax position, etc., it is of low value. The client doesn't care. It doesn't open business opportunities for me. And therefore, why should I do it? Now, I remember back in the day when I still learned from people like Etienne Marais Sr. and Etienne Marais Jr. I don't know who still remember them, but the very first thing I was taught at that point was you start with the income tax. And there are so many opportunities from that. And I'm going to talk about that a little bit later. I think another reason for why most advisors or so ignore tax when it comes to financial planning is really that it awakens grudge emotions from clients, because I don't want to pay the government. I mean, how many times have a client asked you to say that, listen, I'm paying too much tax, I've got a tax problem, etc. What can we do, because I don't want to give my money to the government, or whatever the reason might be. Now, in the financial planning and advice world, the things that I've seen since I've been part of this world is that very little attention is paid to tax, if you really think about it. I mean, you do income tax as part of your NQF5, NQF6 and CFP, etc. But when it comes to practice, very little attention is paid to this. And this is evident when you look at systems, F&A's, financial needs analysis systems, etc. They pay very little attention to this. I think the best system for that at least takes all the tax of a client into account to determine their shortfalls, etc., is really Xplan at this point. And most other systems, they don't really look at tax. You have to work in after-tax numbers, etc. Or if they do have tax, then the user must provide a fixed percentage. Now, the problem I've got with this is not the issue that at least, yes, we do take tax into account. Whether it's right or wrong is another discussion. But the fact that the most of the users, I think the far majority of them will actually then use the marginal tax rate for a client. And I think you'll see when I do the demo is that a lot of times that when you look at that, a client might be a 36% or a 41 or 45% marginal tax rate. But when you look at the effective tax rate after all their deductions, etc., the tax as a percentage of their gross income, what they really paid, it's much lower than that. So my problem is that when you use the marginal rate as an assumption to calculate tax in any system, whether it's your own Excel or another F&A system, you are completely overstating certain things. And the problem is that when you do that, you increase the shortfalls. It means that now we're taking money away from the disposable income, and maybe too much money is going towards risk cover, too little is going towards retirement, or the plan overall requires so much money that the poor client can't go anywhere and he's permanently at home every single day of his life. And then this thing about advisors. Why don't they use tax to sell? Tax offers so many opportunities, but they just don't use it. They don't focus on tax. They don't look at the IT34s, the tax assessments of the clients, and see, where can we find more opportunities, and where can we ask questions to the client, etc. So it really baffles my mind that, first of all, you need to understand the client's tax position so that you know what the impact will be when we implement investments or retirement planning, or we put any other sort of plan together, or we advise certain structures. But apart from that, just looking at that tax return or the tax assessment, there are so many hidden gems that might just be business for a financial advisor or a financial planner. Now, when I look at, because I also dabble a bit in bookkeeping and accounting, and I work with some of these people, but when you look at the smaller accounting firm and the smaller bookkeeper and the tax practices, and I'm talking about 1-2 man shows, so there's maybe one person and an assistant, or one person and two admin people, etc. So I'm not talking about a big practice where you've really got like departments, etc. But when you look at this, when they do tax for a client, they really give them a breakdown of their tax. So what they would do is submit it and send them the statement of account from SARS and say in an email, listen, so you're getting back so much, or you need to pay in this amount and this is why. But they don't really give the client a printout with a breakdown of their tax. And the ones that do, all they really do is give the client a replication of the IT34. And it's normally like a high-level summary, etc., or just sort of to show we've done this, we've used this is what you could have deducted, etc., just to maybe make it a bit more understanding. But in essence, it's a replication of the IT34 or the final tax assessment that SARS issues after they finalize the client's tax return. No other value is provided. They don't look at anything else, and they don't try and tell the client that, listen, here's an opportunity to maybe make yourself more tax efficient, or maybe you must look at this, or maybe there's a risk here. None of that is done. No insights or additional advice is offered. Not to restructure, maybe if there's a case to do that, nothing. Now, I believe it's not because they don't know how, they don't want to. The problem is, like this picture shows, it's just the workload. If you want 2 or 3 people in a busy practice, there's just no time. It instead of it feeling to you like I'm providing value to my client, it feels like I'm duplicating work, because SARS issues a document and now I need to do the same thing just to give the client something else. So I think this is something that I've really noticed, I run a tax practice as well, and I've seen it in our practice. There's not always time to really do stuff or to give additional things to clients when you're in that position. Now, I've been in the financial services industry since 1994. I started at Standard Bank, but if I discount my years in the bank, I really started in the financial planning industry in 1998. And in all my years since then until, even today, I worked with so many different financial advisors from all walks of life, independents, banks, small IFAs, big brokerages, that kind of thing. And I've worked with tied advisors, with the entrepreneur side or the franchise side and with the direct branches, etc. So I've really worked with almost any kind of advisor that you could think of. And on the other hand, as I said, I'm also running my own tax practice, and that's been going since 2007. So while I was doing all of this, I realized that, sure, there are opportunities being lost on both sides. So there's opportunities lost to the financial advisor or the financial planner, and there's opportunity lost to the accountant, bookkeeper, tax practitioner, tax consultant, And that sort of, when I became aware of that and I started thinking about things, I really went into the tax assessments of clients. I looked at the law, etc., and I was able to identify 9 opportunities. 9 opportunities, and we teach these 9 opportunities in my income tax course that we present, or the income tax workshop. We teach that, and it will soon be available on our online version of that income tax course as well. But 9 opportunities, 9 reasons to talk to the client. Now, just of that 9, I think 6 are really business opportunities that can lead to business, and about 2 or 3 of them are really more value-adding stuff, things that you can make the client aware of that they can change that will actually benefit them from a cash flow point of view, and it's not necessarily immediately business for you. Although if you increase his disposable income, there's always the chance to say, let's take some of that money and do some business. But these 9 opportunities. So once I've done that, I started doing research, and I looked at different business models and how you can actually approach a client and present it to a client and make sure that it's easy for the client to understand, but also that it's not like in your face kind of thing, because that's something that I personally don't like. Now, the one thing that was missing in all of this, so I had all these ideas and business models, etc., but a tool was missing, a tool that could help me make all of this really work. Now, what did I want from this tool? Well, first of all, that tool has to automate the identification and the quantification of opportunities. In other words, it's got to say, oh, there's an opportunity, and then sort of calculate what the opportunity is, or identify the risk and how big that risk is. It should all just happen automatically. Then it must exponentially speed up the process. I can't spend a lot of time, sort of, let me put in inverted commas, duplicate work. It really needs to be a quick process. It's almost an in and out, boom, boom. I put in a few things, and then everything else just happens automatically at the speed of light, like Bill Gates likes to say. So then at the push of a button, I want to generate a report. But this is not just any report, because one of the biggest issues I've got at the moment with current systems in the market is that they generate very nice looking reports, and they're very nicely put out, and they format it and everything, but they don't talk to the client. They talk to the advisor. So what I wanted first of all was a report that was specifically written for the client. So the tool is for me to use, but the output is for the client. It must be simple to follow, and it must be simple and easy to understand. Then it must be in plain language. So no like technical stuff. I fondly remember my very first meeting that I attended, my very first IT meeting, like people talking about technology, and they all talk in abbreviations. And I was like, what is going on? And so from that moment on, I realized, like, I want to talk in plain language. Now, I know when you talk in plain language, sometimes you maybe don't seem as, or it might be perceived by some people if they do that they won't be seen as very professional or very highly qualified or very experienced, etc. But I think it's worse if a client don't understand you and just say yes, 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 sign, and they don't know what they're signing, or worse, they just leave because they don't talk, you don't talk their language. Then it needs to shine a spotlight, and I'm really using the word spotlight, nothing to do with the old spotlight system now that I think about it, but it shines a big, massive light on the important financial aspects and considerations that a client must be aware of and that the client must undertake. That is really the purpose of this report, is to say, hey, look here, look there. This is the issue. That is what you need to be aware of, etc. So that is very important from a reporting point of view. And then, I mean, there are many. You can get an online tool really just quickly calculating what your tax is that you need to pay. So this report needs to provide much more than just replicating the IT34 or replicating at a high level the tax calculation. That is not what I want from the report. I want something that gives me more than that. Then the tool in general should not just only be doing personal income tax. It must be doing other stuff as well, specifically from a financial advisor point of view, but also from a tax consultant and a tax practitioner point of view, because sometimes clients actually ask tax practitioners these questions instead of their financial planner. So it was a need on both sides of the table to say that, okay, it must do more than just personal income tax. So that was another requirement. And then I wanted it to complement any other system that exists. Now, I'm talking about specifically on the financial advisor side. You're talking about, the F&A systems, etc. So this is not competition for anybody. I think this is exactly, or it's actually just plugging in my mind, or in my opinion, a gap with these systems. Because although some, like Xplan, calculates the tax, and it calculates it fairly accurately, and it projects it over a long period of time, the issue is they don't tell you where there's opportunities. That's for you to go and figure out. So it's just as much as that you go and take a IT34 and try and figure out for every single client where it is. So I want this system to be quick. It must tell you what the real tax rate is that you need to use. It needs to show you the opportunities, etc. And then boom, you move on. So that is really the tool that I envisioned and that I wanted in terms of this. And that is how it was born. So very simply called the tax tool, and that's where T3 comes from. It's the 3 T's in the tax tool. Sometimes I'm very, creative, but in this instance I was like not that creative. So I just went with, what does this thing do? It's a tax tool, and I'm sure I could have come up with a better name. But be it as it may, at least I like the logo, and the tax tool tells you exactly what it pertains to. And once I show you what it does, you're going to be amazed. So what I'm going to share with you today, and thanks again for watching this. First of all, who will be benefiting from using the tool? So who should be using, or who should buy the tool and use it? What the tool can do for you and for your client. Then just how amazingly quick this thing is, how quick it is to input the information, how quick everything happens. It's like really like every time you push something, it just happens. And then the different uses of the tool, because it's not just calculating tax and looking at the report. You can use it for different things. Then I'm quickly going to look at some different models to grow your practice around the tool. So with the tool at the center, how can you now grow your business by utilizing the tool? Then I'm going to show you how to get your free trial. You get a 15-day free trial and full access. And after the 15 days, it will expire. And then if you like the tool and you would like to continue to use it, then you need to buy the full version. So on that note, let's do this. So let me start off with showing you or sharing with you who will benefit from using the tool, because that's the most important thing. Is this something that's going to be great for you and your business? So from financial planners, financial advisors, paraplanners, tax consultants, tax practitioners, accountants, bookkeepers, that anybody else working and supporting these kind of people that deal with client service, to sort of give feedback and communicate with clients, etc., they will greatly benefit from using this tool, and in particular the report that is generated by the tool. The value add to the client, it's just amazing. So when we get to that, I'll show you what the report looks like, what it does, and then you can see for yourself. All right, so with that, let's get into the demo. So let me switch to the tax tool. All right, and this is what the tool looks like. So it's built in Excel. It is compatible back to Excel 2010 and anything after that, and then also Windows 7 or later. So unfortunately, this does not work on Mac at the moment, and it's really just because Microsoft Office, the programming behind this is not the same on the Mac as it is on the Windows in terms of functionality, and therefore, unfortunately, this tool, we did test it on a Mac, but it doesn't work currently. So This is what the tool looks like. It's built in Excel, but the only real part of Excel that you can see here will be the green here in the background. But anything else doesn't look like, it's not Excel's, the menus, it is not the buttons, it is nothing. So all we've got here is a file. When you go to File, you will actually see that there's nothing to do but print and share. The tool, and then we've got all of these buttons over here. So the only thing you can really do, and the only way that you can navigate in this tool, is by using the buttons here at the top. And that's really what we wanted to do, is to make this, although it's Excel based, at least give it the look and feel as far as possible of a normal application that you would have on your laptop. Alright, so without further ado, I'm not going to tell you how this thing works. I want to show you just quickly what tools there are, and then I'm going to run through, show you how, or what the, when we do, how quick it is to do a tax calculation, and then what the report looks like and how quick everything goes. So you'll see that the three tools that's currently available is personal tax, which is the screen we're on now. Then we've got retirement lump sums. This is to do with retirement, death, or severance. Whenever you receive a lump sum from a retirement fund, in those regards, you can do the calculation. And then for withdrawal, so on resignation, etc., when it doesn't fall within the ambit of severance, then it's a withdrawal. And we also do those calculations as a separate tool. So these are three separate tools, all combined in this. And then we've got a full report, and we've got a summary report. You can print any screen you can see. You can click on print. It will actually ask you to print. You can export it to a PDF and email it, print it, save it, whatever you want to do with that PDF. It's a normal PDF. Then you've got online documentation, full online support, step by step, field by field, with pictures and everything to help you. Whenever you get stuck in the tool, just click that button. It'll take you right to the website and the online support where you can see what to do. The online training is coming soon. That'll be a free online course on how to use the tool in detail. This is obviously not a training session, it's a demo. Then if you want to contact us, you just click the button and it will show you just what the contact details are to get in touch with us or with me. And then if you want to send us a suggestion, just click the send a suggestion button. It'll take you to the website. You fill in a form with your idea for the tool, or even if you want to report a mistake or an error in the tool, you can do it the same through there as well. And then update your info. It's just I've already put in my information that's going to be showing on the reports, but you can just come and update that as you wish, or when things change, your telephone number change, etc. All right, so without further ado, let me show you what this tool does. So let's choose a client, Peter. He is 45 years old and he wants to retire at 65. Now, these ages are important. The current age, the most important. The age of retirement is important for the calculations that we're going to do later on. And you must choose, obviously, how the client is married, because this tool will take all of that into account. So very quickly, let's say this was a commission earner. He earned 600,000 for the year. All these amounts are annual amounts. Let's say he received or the employer paid a contribution of 30,000 to his retirement fund, and they also contributed 20,000 to his medical aid. So no other fringe benefits, no other income. Let's say he received a rental income. This will be a net after so the net taxable rental income that you'll put in there. So let's just say that was 20,000 for the year. And let's say he also received some domestic interest from investments. So he invested a bit of extra cash, etc. So he earned, let's say he earned 30,000 for domestic interest, 50 for dividends, and then offshore dividends, let's say he earned another 10,000 Rand. Now you will see as we go along, the calculations are happening. So he's got a total gross income of 760,000 Rand. Then when we move down to the exemptions is automatically applied according to the rules and the age of the client, etc. So you will see that all of the dividends are exempt. The domestic interest is capped at the 23,800. Foreign dividends is automatically calculated for you. And then there's space for other exemptions, so 10A voluntary annuity, 10C, etc. And under other exemptions, you can use things for foreign employment, or bursaries, or even tax-free investments if you want to show the tax-free investment here at the top, and then again exempt everything down here. You can do it under other exemptions. But this now leaves us with a total income of 686.44. When we look at the deductions, what deductions can we claim for the client? Section 11A, so your general deduction, someone that's earning a commission. So let's say he's got deductions of 100,000. And then his defined contribution retirement, or his defined contribution retirement funds. How much did he contribute? So this is the client's portion. Let's say he contributed 30,000 as well. He's got an RA, but he only pays 12,000 a year to that. He didn't make any donations. For medical aid, very, very quick, what did he pay? Let's say he paid 40,000. Any additional medical expenses? We've got an explanation to help you, because not everybody know what qualifiers can I use over-the-counter, can't I, etc. So this explains everything, so it helps a bit with that as well. But let's say there was 10,000 of additional. So you'll see as I'm putting in the numbers, it's already calculating the different tax credits. So now I need to say how many people were on the medical aid every single month. So let's just take a full year. Let's say there were 3 people. To make it quick, you can really just copy the numbers across. You can't overcopy or anything. It will calculate it by itself. All right, so click on the back button, you're back, and there is your tax credits already done for you. So not a lot of issues, no difficult things to enter for medical aid, and it's boom, it's done. All right, so capital gains, if there were capital gains, very simple, put in your primary residence, choose your exclusion. The calculations do check that we don't go over, etc. But these are just this is just a simple way if there were multiple disposals during a year to put it in, and then it will calculate what the taxable gain is based on how you're married as well. So if you're married COP, it will split it in half and whatever. So these numbers will then automatically pull back, or pull through rather, here to the taxable field. Then travel allowance as well. You can do 2 cars per annum at the moment. So if the client drove 2 different cars during the tax year, so he drove 1 car, then drove another car, or he like interchanged between the cars, it does do that for both. So you will complete that, and it's important to complete the full amount. That's why we didn't just use a field where you can put in a taxable portion. We need to know exactly what he received, how he received it, etc., because this is important to calculate your retirement fund contribution deduction limits. So here you will see that it's allowing the full 60,000 and the full 12,000, but there's a calculation happening in the background, checking if he's within the limits as the law currently stands, so the 27.5 and the 350. And that's it. So now I see that the client was supposed to pay 109,000 Rand of tax for the year after everything, his deductions and his rebates. Then the pay as you earn that he paid. So you look on the IRP5, how much pay as you earn. If he's got more than one IRP5, you need to add them together. So let's just say that he paid 90,000 and he paid 10,000 in provisional tax period 1, and then he paid another 10,000 in period 2. So now you can see it says that there's a refund due of 784 Rand. All right, so that's the final tax. That is what's supposed to happen. When you compare this to the IT34, if both, or if the information for both was submitted in the same way, the same information, then the answer should be the same. And then the net effective tax rate is calculated. So really what happened is that the client paid 14.37% tax. And that is the tax payable, the 109, as a percentage of his gross income, including any capital gains that he might have had during that period as well. So this is my point now, where the marginal tax rate is 36%, because the taxable, the 508,000, falls within the 36% tax bracket. But when I look at after his deductions, after his rebates, and especially the medical tax credits, makes a big difference. He only paid 14.37% tax. Now, if you're using a financial needs analysis system and you put in the 36%, that is more than double what he actually paid in tax at the moment, obviously assuming that his tax stays fairly similar. But even if you then use a 20%, it will be a much better percentage to use than using a 36%. All right, so now that we've done that, you've seen how quick that went. I didn't time myself, unfortunately. Let's first look at the view summary report. So the summary report is really just that. It's just a summary of the tax payable, as well as an explanation of what he effectively paid in tax, just in words so that the client can understand. But this is a high-level report, so it just gives totals for each line item. If you're on the personal tax screen, you can actually print this out. You can print or export to PDF, as well as the report, so you can then add them together for someone who wants more information in the background. This report is ideal for tax consultants, tax practitioners, people who just want to give something to the client, and it mustn't be like I need to duplicate work. It must be done immediately. And at least there's this little thing here at the bottom explaining that for every 1,000 Rand you earned, you paid 143 Rand 71. And then what the marginal tax rate, what that 36% means. So that is that. But the real power is in the full tax report. When you look at the full tax report, when we go down, obviously you'll see it is customized, so it will have the client's name, however you put it into the system when you capture it. How your information is captured in the system, it will show here. It also starts off with a summary of the tax, as well as what the client effectively paid in tax. So exactly the same as the summary. But now the magic happens after that. So first of all, the report will now look at the retirement contributions, what the client has paid, and what they, what part of the deduction they're not using at the moment. So what it's saying is that this client, Peter, can contribute an additional 8,000, call it 900 Rand, to a retirement vehicle, be it his pension fund, provident fund, or retirement annuity fund. If he does that, and his deductions and exemptions, etc., stay fairly the same, and the income stays fairly the same as it was for this year, then he'll save a further 38,000 Rand in tax. Now, if you take the 8896, you invest that from now until his planned retirement age, which was 65 that we put in, he can save an additional 6.8 million Rand. This contribution is increasing at inflation. If I then also take the 38,000, so the tax that I get back that can be attributed to this specific contribution to this RA or this pension fund, if I take that 38 and I invest that as well every year from now until age 65, it can give me an additional 2.4 million, so a further 2.4 million, meaning that I can have an additional 9.2 million at retirement. If I then take a 4% income on that, that means 461,000 of income before tax, additional income that I didn't have. Now, remember that this is not a financial needs analysis. This is purely providing information to the client to say that, listen, you can save more tax, but at the same time you can save for your retirement. Now, the conversation that this should lead to is to say that, listen, before you just go and contribute 8,000, if you look at that 8896 and how much that is per year, the 8896 per year is actually 106,000 Rand. So you're spending 106,000 Rand to save 38,000. It just doesn't make sense if you've got other things to do. So now it's for the financial advisor to go and see where is the client in his retirement planning journey. So is he still short? Does he need to contribute more? Is an RA the right thing for him to do, etc.? But at least this is planting a seed and making the client aware that there is an opportunity here to save tax and to save for retirement. So then when we go down, we've got capital needed to replace your income in different events when something happens to the client. Now, what I've done is I've done some research. I've looked at quite a few IT34 assessments, and I tried to identify, what cash portion will you lose in the event of death? What cash portion will you lose in the event of disability and when you actually retire? So meaning it was cash that hit your pocket after tax and after certain expenses and deductions from your employer, etc. If you weren't self-employed, if you were employed by someone. Now, in this case, that calculation works out to 468,000 Rand a year. That's gone. That used to be there. That's now gone. And then what the report does is to say that, okay, so if you want to replace that amount for 5 years, for 10 years, for 15 years, for 20 years, and increasing it with inflation, by the way, you will need about 2.2 million, 4 million, 5.8 million, 7.3 million, depending on how long. So ultimately the question here is, how much do you have? Do you have that kind of capital available And how much of that would you then really be wanting to protect for your family? And then it also goes and says, okay, but what about your debts? What about your estate? What about your funeral costs? What about outstanding taxes and fees, etc.? And then to say that, okay, so do you have enough capital to cover all of this? So I'm not talking about life cover. I'm not selling anything. I'm just asking the question, do you have enough to do these things that we just looked at just based on your tax return? So this is the powerful thing from both the tax practitioner and consultant side and the financial advisor side, because no other tax practitioner is giving their clients these kind of information. So this kind of information is really, really powerful, and it can change a person's life if they really go and do something with this by going and seeing a financial advisor. For disability, it works the same. You'll see it's a different number because there's other things at play. You're not dead. You still need to provide for retirement, etc. So depending on the benefits that they got and how their tax is structured, this will most probably give you a different number than at death. So 540, now I need 8.4 million, and it is to protect that income from now until age 65, which I put into the system. Then again asking, but what about debts when you become disabled? You want to cover that at least. And then, do you have enough to replace? And you can also consider income protection, etc. So it's mentioning a few things, but again, planting another seed. Then if I go to when you retire, it does exactly the same thing. What is really lost in terms of cash? And then just to say, well, if you're going to retire at 65 and you want to earn that same level of income in present value terms, basically, for at least 25 years after retirement, and you want to replace 70% of this, you need so much. If you want to replace 85%, you need so much. If you want to replace 100%, so much. And then the very powerful thing to say that, but how many paydays are left? In this case, 240. So there's 240 times that I can contribute to this until my planned age of 65. All right, so that is sort of all planting seeds and giving the client more information to say that this is sort of what you should be working towards. Now, obviously, the retire, this is after tax amount. So this is not pertaining to specifically investing in a retirement type vehicle that will be taxable. But it is a starting point. All I want is for the client to sit down with a financial advisor or a financial planner in order to discuss this situation. Now, in the notes, you'll note that I mentioned quite a few times that this is not a financial needs analysis. I do not have sufficient information. At the moment, the assumptions are fixed. So it's 10% growth, 7% inflation. And it is just on the basis that, look, I don't know the assets and liabilities of the client. I don't know the income and expenses. I also don't know any other relevant information, what their will looks like or what's going to happen or how much they actually need. So this is just for information purposes. This is just to let the client phone his financial advisor, or to, if you, the financial advisor, ask you to listen, we need to look, or at least it's something for you to tell the client, my friend, there's a problem here, we need to get together and have a discussion. All right, so you'll see that I mentioned that quite a few times. So it's very clear that this is not, you can't make any financial decisions based on this report alone. Now, that is currently what the report is doing. In the next major upgrade that's coming in March, in March 2018, there's going to be more things that's going to be taken out. So those 9 things that I spoke about, I want this tool to identify and quantify every single one of them. And at the moment, we're sort of halfway there, so there's quite a few things that I still want to build in. But I need to prioritize and see what are the things that's going to make the biggest impact right away. All right, and that is really then where the power is in this tool, and I'm pretty sure that you can see the value already. And I'm going to share with you just now, whether on whatever side of the table you're sitting, why this tool will be very valuable to you. I'll just very quickly show you the retirement lump sum tool. You'll see that there's place for 5, so it's not years. This is, although it says period here, this is really lump sum number 1, lump sum number 2, lump sum number 3, 4, 5. So whatever point in time it happens, it doesn't matter. So if I go 500,000, you know that there will be no tax payable because it's within my 500,000 limit, and therefore I'll get my full 500,000. I didn't pay any tax. Whenever I get a subsequent lump sum thereafter, whenever that might be, now I get 250. And if I do that, now suddenly there's tax that starts to build, and now I'm paying at a 19.8% because that full 250 is actually taxable now at 200,000 is taxed at 18%, and 50,000 will be taxed at 27%, and therefore I get an effective rate of 19.8. Now I get another, whenever in the future I get another fund. So let's say I've got staggered retirement, and there's another RA that pays out. Now it's climbing. Now I'm at 30.6% effective rate, and of this 500,000, the client will get 153 out. So it's a fairly comprehensive. It does the full calculation, allows you to deduct any things that are allowed to be deductible, and it keeps track of everything that any previous lump sums that you've received. You can also here on the side input any previous lump sums that were received before this one is being received. So the tool, and even section 10C, the compulsory annuity, if you're going to use some of the excess rollover contributions for that, you can keep track of that. So it's a very, very comprehensive and perfect, accurate lump sum retirement tax calculator. So when I go to the withdrawal lump sum, it's exactly the same. It's just that the bands are different, but it works exactly the same way as that. All right. So with that, I'm going to go back to the presentation, and then I will share a few insights in terms of the business model with you. Okay, so when we look at the different business models, there's really like sort of 4 or 5 or 6 actually that I've managed to identify. But let's talk about the main 4. So on the one hand, you've got someone who only does financial advice. So they are licensed financial advisors with the FSB. They've got a license number. They are allowed to give financial advice and intermediary services. So that's on the one hand. On the other hand, you've got people that provide tax services, and they only do that. So they don't do financial, so they don't sell policies and investments, etc. They just do clients' tax, and they might do their books and financial statements, etc. But they focus on the tax aspect and is not interested in giving financial advice. Then the third party that you get is really the person that's both. So he's both a financial advisor as well as a tax practitioner. Or even sometimes you get accountants that are also financial advisors. So both of them are combined. And then before I get to sort of where there's a big possibility is to say that, okay, if I look at the financial advisor, how can you use the tool? Well, at retirement, number one, I can quickly now, if the client is getting income from different sources, put them in and see what the combined tax effect will be. And then I can tell the client exactly how much of the money should be put away. We find it every single year where a client retired in that year, they must pay in. And the simple reason for that is that the client earned an amount of income from employment. He worked for a part of the year, then stopped. He now gets an annuity income, and that annuity income more often than not is a lot less than what he used to earn. Now, if you look at that income, the company or the product provider paying the annuity thinks that it's his only income. So it's either not taxed if it looks to be below the rebates, or at a lower rate than what it should be. So what inevitably happens, you're supposed to add everything together and then tax it. So he should have paid more tax. Now, this tool makes it in 2 minutes. You can tell a client that, listen, so of this is how you can use it. So put away so much of your money, or we need to fill in so much, a certain percentage on the application form to ensure that the product provider is deducting sufficient tax. So you can use it like that. Then you can use to just calculate how much can you still contribute to your RA. There's some other things that's coming that's going to be identifying certain things for you that you can ask questions about, because believe it or not, you don't know everything about the client, but SARS does. So keep an eye out for that. Now, the other thing that you can then do is obviously when a client brings you his IT34, so if he's already submitted his IT34, put it into the system and then give him the report to show him, you know what, let's see where you are against these numbers. We need to have a discussion, or you know what, you actually got too much. Maybe we must make some changes, whatever the case may be. Now, tax services, on the other hand, they can just use it to be able to generate a report, just a summary report, and give the client something that looks nice and that at least feels like this is the work that you've done and not just submitted the return. But you can also give them the full report as a value add and say, listen, you know what, there's some numbers that we crunch. We can't give you advice. We don't want to give you advice, but take note of these, and as a value add, go and discuss it with your financial advisor. So that is obviously from that. So you enhance your value proposition. You give them something that they didn't expect, that they didn't pay for in their opinion. But yeah, so that is important. The guy that obviously does both, so the financial advisor who's also a tax practitioner, he can use it for planning purposes as well as for doing a client's tax return, and then using the opportunities that then come from that. So that is really the guy that can use it for. You can use a version of the tool, for 2 full years, first year in advance to plan for the year, and then the year thereafter to really do the tax returns and then identify new opportunities for the following year. So very, very important. But there's a huge opportunity that exists for financial advisors who doesn't do tax and tax practitioners who doesn't do financial advice to really come together and form, I don't know if partnering is the right word, hence it's in inverted commas, but at least form some sort of an alliance or start to work together, build a trust relationship, and start referring clients to one another. So when the financial advisor sends clients to the tax practitioner, his business grows, and there can be a fee split, whatever it is that you want to do, or are you going to see value. As long as there's fair value exchanging hands, you can do that. And then obviously, in return for that, because it's the financial advisor's clients, the tax practitioner can then go and then send the report back to the financial advisor so that the financial advisor can then exploit those opportunities and then maybe share in the commissions, etc. At the end of the day, the tool sits in the middle, and it is really the thing that accomplishes both of these things and help both these two people work together and very quickly, without spending extra amounts of time, just build more income, more revenue, grow both businesses, and just have a mutual flourishing relationship. Now, the other thing, of course, what you can do is, if you're a financial advisor, is incorporate a tax practice into your business. So either get someone in who's got an existing practice, merge and do your own thing, or start. I've actually written some articles of how you can actually do that. That was published by the FBI in their Financial Planner magazine. And that is something that I can help you with. If you want to start your financial, a tax practice because you've got an existing client base and there's opportunity, you hold a relationship, we can help you with that. But anyway, that's a bit off the point. And the next thing now is, how do you get your free trial? The one thing you've been waiting for, and you'll see the link on the screen. So you go to tech.francoisdutoit.co.za/products/tax-tool-free-trial. When you click on it, it will open up it will immediately open up the product page. So I'm going to do that to show you. Okay, and that is what the product page will look like. You will land on this. It says there the tax tool version 2017-18, and it says 15-day free trial. So make sure it's that one and that the price is showing as 0. Right, so to get it, you can read through the descriptions. Make sure you do that. Who will benefit, the features, the trial, how that works, and then how to get your free trial. There's a step-by-step explanation. And then the system requirements, very importantly, you need to have a look at. But that's the nice thing about getting the trial. First, make sure that this works on your machine and you have no issues before actually going out and buying the full version. So what you'll do is just click on Add to Cart. It will follow the same process as buying the full version and actually paying for it, except that you don't need your payment details. So what you'll do is it will just put it into your cart. You don't have to do anything here. Just click on Proceed to Checkout. So it's very easy. And then you just put in your details. So I'll do that. So once you've completed all your information and you've chosen a username and a password, just make sure with the password that it must be at least of a medium strength. It will tell you if it's weak and you need to make it stronger. Just use capitals, small caps, numbers, as well as special characters to achieve that. It's got to be at least 6 digits long. So once you've done all of that, you've completed everything, you can just click on Place Order, and immediately the system will go in. So obviously I already have so it's saying that I've already got this username. So let's just say Peter Pan. So that's fine. Place the order. And so if there's any errors, you'll just get the message to show you what is wrong. And the system will run. And then get you to the final page. So then it says your order has been received. Thank you very much. The downloads. So here you get a link to download your free trial. Now, just for people using Internet Explorer or Microsoft Edge, when you click that, it asks you, do you want to save as, or open? Choose open, because when you choose save or save as, it doesn't work, and you only get one chance to download the trial. So if anything goes wrong and you can't download again, please get in contact with me, and we will sort you out. So you click on that, and then click open, and from the open you can go and save the tool by clicking on the save icon in the toolbar. Alright, so you'll see it downloads. You can click on it, go save it somewhere, and then you can use it for a full 15 days. Alright, then as far as support is concerned, we've got full online support. So when you go to the website at tech.francoisdutoit.co.za/support/tax-tool-t3, or on the menu bar, you can go to, you'll see there support. If you have a look here, so we've got support. Go to the drop down, it says the tax tool. You click on that and it will bring you to the online support. So there we've got a full breakdown of every single button, every single field, how to start up with pictures, descriptions, the whole lot. Everything is there that will help you. So whenever you get stuck, even in the tool itself, even if you look here on the screen, it says online documentation. So just click on online documentation. It will bring you directly here to the help page, and you will find there. And if you don't come right, please get in contact with us. We will gladly assist you where needed. So that is as far as support is concerned. The online course is coming soon. That will be a free online course for you to take, and that obviously then takes you through lessons and case studies and the different uses of the tool and how you use it for retirement planning, for doing a client's tax, etc. So it will do that. Then the big thing, what is the cost for the tool? Now, it depends on whether you are a first-time user or a returning customer. So if you're a first-time customer, we've got a special launch offer of 1,800 Rand once off for the current version, which is 2017-18. Because we are so close to the new tax year, we will, if you buy this today or now before the 15th of February 2018, if you do that, you'll pay 1,800 Rand, but we will also then give you the major upgrade then for the 2018-19 version for free. Now, why shouldn't you wait? Because number one, you're going to pay 2.5 instead of 1,800, and secondly, it is RA season. So use the tool now already to make more money. Tell people, show them how much they can actually contribute as a lump sum towards their retirement funds in order to get their maximum tax deduction. So don't wait. Just do it now. You will get this version as well as the next release in the second week of March 2018. And you can use that until next year. So every time we have a major upgrade, so a major upgrade will be from one tax year to a next tax year. But that will also, it's our guarantee and our promise that it will always coincide with enhancements to the tool as far as possible, obviously. So we've got already a list of 18 things that we want to do with the tool to make it better, to expand it, etc. So there will be, the tool will just become better and better and better. Now that's if you're a first time customer. If you're a renewal customer next year, so you bought it this year, next year you will get a 40% discount to renew to the new tax year and get the latest version with the latest functionality at that point. So that is what it's going to cost you. It is my dream to take this and make this an online system that can integrate with systems, etc. And I need your help. By purchasing and supporting us with this system, you will greatly enhance our chances of being able to take this online and make this a fully functional tool that can integrate with other tools in the future. So how can you pay for this? That's very important. We use PayFast. PayFast has got bank level security. If you go to most of the e-commerce stores, etc., they also make use of PayFast. So PayFast, really, you've got three options. There's instant EFT. That is, if you don't want to use your credit card or your check card, go click on the instant EFT. You choose your bank. That it takes you right into your internet banking. You do your stuff. It is completely secure. You make the payment from there. It's a once-off payment. You don't have to set up a lot of things. It's already got our details. So it's really just saying, this is the amount. What account do I want to pay it from? And it's instant. The moment that you do that, immediately you'll be able to download the full version. Alternatively, you can also pay with your MasterCard or your Visa card, or if you've got a MasterPass card, you can also then pay with that. So all of these options are available to you to make it as easy and as quick as possible. So please, you can trust, go look at PayFast website, their privacy statements, etc., as well as ours at the bottom of the website, and you will see that you are completely safe to use these our specific payment portal. Just a disclaimer that we do not keep your information. If you ever choose to save your card details, etc., it's saved at PayFast. It's not saved with us. So everything is on their secure site and not on our side. All right, so if you've got any questions, you're welcome to email them through to us. The email address is tech@francoisdutoit.co.za. Sorry, I haven't got it on the screen, but it is tech@francoisdutoit.co.za. Send us your question or go to the website, click on Get in Touch, and send us your question or whatever you need help with, and we will gladly talk with you or get in contact with you to help you with your questions. All right, so who's the winners? It's you. It's your client. That is who the winners are. Use the tool, use it to your advantage, grow your business, and help your clients in the best way possible. Thank you very much. I appreciate that you spent the almost 56 and a half minutes with me, 56 and a half minutes with me. My name is Francois du Toit, and I sincerely hope to see you as one of our clients very soon. And if we can help with anything, please don't hesitate to contact us. Thank you very much.